we celebrated our first million customers, which we onboarded in 4 years. First loan we did was April 2013. And I think 5 months back, we took the whole channel and the whole company and our investors to Dubai to celebrate the fastest acquisition of two-wheelers finance company of 1 million customers. And it wasn't completely flow lending. Of course, there was a bit of convention. I will speak through it through my note today. 1.3 billion live in approximately 500 cities, 7,500 towns, and 6 lakh villages across the length and breadth of this very large, incredible, and diverse India. 69% of them live in villages. That's about 900 million people. I often wonder what their finance habits are like, where they bank, what they buy, and how they spend. Luckily, I don't have to look too far to glean the insight of the 69%. It's not a part of the formal financial sector. I'm sealing this thought for now and will circle back in a few minutes. The World Bank tells us that there are about 460 unique saving bank account holders in India. It also tells us 43% of these accounts, or about 200 million, are dormant and are not being used. This leaves us with about 260 million unique active people who use the formal banking system in India. Out of 1.3 billion people, 40% are currently under the age of 18 years, which leaves us with 780 million people of a bankable demographic. A large chunk is getting added annually. If having a bank account is taken as a proxy for financial inclusion, which it is, the finance penetration in the addressable Indian market is about 33%. These numbers are a problem as well as an opportunity for all of us sitting here in this room today. These numbers reflect the story of India. This is where we are in the financial services today, on the brink of a disruption with the ability to leapfrog several generations of innovation to be at par with the developed nations of the West. What a great time to be in this business, right? Technology is usually a catalyst for significant change and for nation-building activities. However, it has to be truly differentiated to work and requires significant time, effort, and patience from the private sector to bring in change to fruition. Armed with this thought, we embarked our journey of Hero Fincorp, a 25-year-old fintech startup. Are you guys surprised? 25-year-old fintech startup. Let me explain. So Hero Fincorp was actually incorporated in 1991, but like those dormant bank accounts that I spoke about earlier, this lay in dormancy till about 2012. It employed 2 people out of the finance department of Hero Moto. It had a loan book of 300 crores. It did not have an office, did not have policies, 0 NPAs, and highly profitable. I took charge of the business in 2012 with 3 clear hypotheses. First, that there is a supply constraint in financial services. Therefore, more the financiers, deeper the penetration. Second, as a Hero Group entity, we had a mandate to get a social angle or social mobility and to be top 3 in whatever business that we do. And with this mandate of social mobility, we said the man on the street, the real man on the street, is our customer. And we would like to serve him through the life cycle of his needs. And third, it will be built on technology so that we are able to run a lean operation and maximize value for both our customers and ourselves. We took a big risk in this business. for a group which has been built on manufacturing and whose DNA was only manufacturing. Financial services was a completely new ballgame. But we knew returns were phenomenal and the opportunity was huge. The risk we took was well planned and we convinced the group to invest. But fundamentally, we did not need to get into this business. So what convinced me to take this risk? There were three main drivers. I guess the most important one was the potential of this business and the personal passion for financial services. My deep desire was to continue the legacy of my grandfather and my ancestors, and finally to create something which was differentiated. The added benefits were also able to meet the group's objective of diversification and lever the synergies. Over the last 4 years, my passion has grown, but my drivers have changed. What drives me now is the people. Today we have over 10,000 lives, families, directly or indirectly dependent on Hero Fincorp. Now, my drivers have evolved over the last 4 years. Started with legacy to people. Now we have additional foreign private equity stakeholders. So the driver is to create value for each and every stakeholder and ourselves. And finally, seeing success and tasting it drives me towards further ambition. Believe me, success is the most addictive drug. I believe it's important to have mentors. I have large shoes to fill, given the success enjoyed by my grandfather, my father, and my uncles. It was my uncle, Mr. Munjal, who drove me on to focus on one business in 2012. In 2012, I was involved in 3 to 4 different initiatives for the group. And I was young, ambitious, and I thought I could do it all. And he pushed me and said, Abhimanyu, if you want to build value, focus on one. That was very good advice. At that time, honestly, I went back from the meeting, went home, and I was pretty upset that why am I being pushed to do one business and not the 4 initiatives that were started by me. And he pushed me, and now when I look back, if I was involved in all those 4 businesses, I'm sure today Hero Fincorp would not be a 10,000 crore asset size company. It would still be around 300 crores and we would not have got this success. So friends, focus is something which I would urge all of you budding entrepreneurs to be focused on one goal, one business, and don't get distracted by diversifying too fast. My grandfather used to say, Hole chalo. Who all are Punjabis here? You understand Hole chalo? Huh? Yeah, so go slow. I used to come back home from work, and every day he used to say, Kinni bikes hui? How many bikes did you finance? Right? I used to give a number, it used to be single digit, double digit. And he always used to say, Hole chalo. Even though he pushed me to think big, but mentors keep you grounded. So what that did was, I was chasing a number, I was chasing growth. I had people who were mentors like my grandfather and my uncle who actually kept my feet on the floor. I remember at that time we used to do, first year we did 52,000 two-wheelers we financed. And I think now we finance about 60,000 two-wheelers a month. So I would urge you guys to think and go slow and always have a mentor who's actually telling you to go hole. Some months ago, we scrubbed our customer database. We learned 70% of our customers, out of our 1 million, then now 1.5 million customers, are new to credit. And we were surprised to learn that after taking the first loan with us, within 6 months, they built their credit history and went and acquired loans from outside worth about $1 billion. So I don't have to look, so I think the strategy for us is that the customer should dictate what the next product is. Our roadmap is defined by them, whether it's an auto loan, personal loan, home loan, consumer durable. Hero Fincorp will provide it. And we will use technology, whether it's working with the regulator or using Aadhaar, India Stack payments, infrastructure, or the flow-based lending that was just shown. When we started, we researched, strategized, we thought disruptive models in April 2013. After 6 months of being in the drawing board, we went live with our first consumer loan. I personally visited a lot of villages, towns to understand the customer and the channel partner. And I noticed that the channel was not satisfied with the service of current competitors. There were disbursement issues in terms of time of disbursement. There were recon issues. And we saw an opportunity to use technology to solve these problems. We came up with breakthrough acquisition appraisal process which was built on technology. In 2013, when we started, we were the only NBFC in the country where from acquisition to disbursement, end-to-end process we did over a technology platform. I had recently got an Aadhaar card at that time, and when I went for an Aadhaar application, we saw they had a double screen monitor. I'm sure most of you have seen that double screen monitor, which actually enables transparency and straight-through processing. Today, we are present in 1,000 locations with 2,000 touch points. All these touch points are manned by exclusive manpower and have these double screen monitors so that the end consumer, so that there's transparency to the end consumer, he sees the rate, he sees what the fees that we are meant to charge. There is no manipulation that can happen at the front end. And it enabled us to do straight-through processing and also scale up very quickly. We were rolling out 150 outlets month on month using technology. And when we started, the channel partners and some competitors thought we would cannibalize their business. They went on telling our workforce, telling our channel that these guys are fly-by-night operators. They are new age kids. This technology doesn't work. They will exit in 2 years. But none of that has happened. My promise to the channel partners was that we will not cannibalize. It's a supply constrained market. We will deepen the penetration. So believe me, when we started in 2012, the finance penetration of Hero bikes sold was about 13 or 14%. Today, it has reached to 35%. Our closest competitor that time, who was number 1 in Hero, is still doing the same number that he was doing 5 years back, and we are doing triple that amount today. So it is a supply constrained market. And when we did I'll tell you a funny story. When we did our first loan, we had thought about went to the drawing board. 6 months we did a lot of work, and we had a ceremonial event at one of our dealerships where we had the family, we had the OEM principal, we had some bankers, and we went and dispersed the loan. We went and gave the first bike, and we realized, oh shit, we've forgotten the disbursement process. We were very quick to it. We gave them a check as a ceremonial proceedings, but the learning for me was that we need to be nimble. 6 months we were in the drawing board. We went on to disperse a bike on 2nd of April 2013. We did not know how to disperse, right? So we were nimble like a startup. We acted fast and we evolved. Today we are doing 60,000 in an automated disbursement process. One of my key mandates from the group was diversify into financial services. And when I look back in 2014, we saw our asset book was only two-wheelers and the hero supplier inventors. We said, I am not doing justice to diversification. So we said, let's attack. We saw what were the other opportunities. and we saw under-penetrated market in SME. So we started an SME vertical where we do loan against property, SME and emerging corporates. And this also falls into our criteria of the underserved, since about only 40% of the SMEs are served. And today, the SME portfolio is about 60% of my total book, or 65%. The two-wheeler book is only about 30%. My true intention of sharing the Hero Fincorp story is to articulate and share my learnings out of a startup journey. I'm sure that many of you face similar challenges. Our first learning was to reach out to the customer in a differentiated model, differentiated product. Through the sites and the research that we did, we came up with a differentiated tech-based model. Second learning was to actually was change management. When we hired, and I'm sure a lot of you hire a lot of people, I used to hear a common comment saying, "Sir, ये धंधा ऐसे ही होता है," right? Because I've been doing this business for 20 years. ये धंधा ऐसे ही होता है. So we came up with a philosophy: unlearn and then learn. And with my experience, guys, go with your gut. I know you'll have experience, guys. You're professionals. You'll hire and they'll say, "ये धंधा ऐसे ही होता है." Go with your gut. Today, after after 3 years, the people who said that actually complement our technology and our processes, which disrupted the whole two-wheeler finance market. The third learning was actually that you will make errors. What you see in an Excel, what you see in your IM, what you see in a presentation, the product and the outcome will be completely different. You will evolve. For example, our collection and disbursement process. We forgot that. But the beauty of a startup is that you are nimble and you're open to change. And you will evolve, so don't be fixated that this is the way it's done, and don't be fixated that this is the Excel and we will only go by that. As a startup and as founders, you guys need to have an open mind. You will make mistakes, but learn every day from it. Every day you will learn. So don't ever stop the learning. Fourth, we never took our eyes off profitability. From day one, I inherited a profitable business. Today, the profitability is probably 40 or 50 times the profit that we inherited. Though there was a dip, there will be investments. We understand, and my shareholders understood at that time that we were making investments. But keep your eye on the bottom line. It's more important than chasing numbers. It's more important than chasing asset size. If you have a big asset and you're not profitable, I don't think you'll be creating any value and you won't be doing justice for yourself. And profitable businesses are more defendable. Why are we here as Hero Fincorp? I have my senior management, I have some investors. I think we are here because we feel that this startup ecosystem of financial technologies is here to stay and will disrupt the financial services market. We are also sure of the convergence that will occur between startups and traditional lending organizations.